The beginning of this decade is filled with conundrums. To go out of the house or not? To wear a mask or not? To take the vaccine or not? And the most critical one, to sell your Bitcoin or not? The answers to all these questions are not based on common sense, but personal choice of taking risk. Before you decide what your choice should be, let's take a look at the consequences of your decision. Bitcoins are lines of computer code that have a monetary value. It can be used to purchase goods and services online with businesses that accept them, or can be tucked away in the hope that their value increases over time. For those who still do not understand Bitcoins, let's take an example. Say tomorrow, a company says that you can purchase property by using notes from Monopoly game. What will happen? To purchase this company's property, you will buy Monopoly game and give them the notes from the game. The demand for Monopoly game rises and Monopoly notes are traded due to their high value. But is this note a real asset? And is buying and selling in Monopoly notes actual income? Bitcoins are like these Monopoly notes. They are not issued by the government and, sir, are not legal money. But because the value is high, people are buying and selling these. Countries like United States have categorized Bitcoins as shares, so that trading in Bitcoins are taxed as capital assets. But what about India? Is sale of Bitcoin taxable in India? The government of India has not provided any clarifications with regards to the taxability of Bitcoins. As we have discussed, Bitcoins are not real assets. They are mined by using supercomputers, and traded in countries that allow its use. Many articles have been published discussing the taxability of Bitcoin. Say your employer offers you a Bitcoin for salary. What you receive is a computer code. This code can be used to make payments or can be traded. But you do not receive any legal money. Will this Bitcoin be your income from salary? You will receive real money only on sale of Bitcoin. In this case, is Bitcoin an asset like gold or is it income from gambling? Irrespective of the treatment, there is no doubt that profit on sale of Bitcoin will be taxable. Taxability will depend on your residential status and the location of receiving payment. For residents, income will be taxable irrespective of where payment is received, and for non-resident, income will be taxable only if payments are received in India. But how will the government know that you have sold Bitcoins? Digitalization has made online verification of data very easy for the government. This verification is done by receiving reports from specified entities like bank, mutual funds, credit card companies, etc. So yes, the government will receive information about your sale through bank reports. And non-deposit of taxes may lead to you receiving a notice from the income tax department. Now, let's see how to calculate your income tax on sale of Bitcoins. Calculation of income tax on sale of Bitcoin will depend on how you have obtained the Bitcoins, what is your purpose of purchasing the Bitcoins, and how long have you had the Bitcoins for. If you have purchased Bitcoins as investments, then you can use tax calculator available online for calculations. These do not ask for any personal information, but only calculate the applicable taxes. However, given that no clarifications are provided by the government on taxability of Bitcoins, if you are unsure, it is advisable to take a written opinion from a chartered accountant or tax attorney. Once you have determined your taxes, it's time to deposit your taxes. Income tax on sale of Bitcoin is required to be paid in advance to the government, which means that you should not wait till the end of year to pay your taxes. You see, generally, our income is subject to TDS and applicable taxes are deducted and deposited at source. However, in case of sale of Bitcoins, TDS is not applicable and accordingly, income tax has to be self-deposited in advance depending on when you make the sale. Non-deposit of advance tax may lead to interest. And to avoid payment of interest, remember to not spend the entire money without first depositing the applicable taxes in advance. Lastly, let's discuss the importance of reporting your income in the income tax return. As we have discussed, taxability of Bitcoins should be examined based on the facts of each case. Self-reporting of the sale in the income tax return ensures that your reporting is done in good faith. Also, given the volatile nature of Bitcoins, if you incur a loss, reporting the same in your income tax return can be used to set off future profits. The future of Bitcoins is still uncertain. However, speculation about the value of Bitcoin has created an inflated bubble. With 900 Bitcoins being mined each day, it is said that the inflation in prices are created due to artificial control of its supply. Indeed, whether to sell your Bitcoin or not this year will be a crucial decision. If the government decides to ban Bitcoins, you will be required to transfer it. And with Indians having to sell their share of Bitcoins, prices may drop. However, given that Bitcoin rates fluctuate every day, holding on to them can be more profitable in the future. Whatever you decide, don't forget to account for the taxes you will have to pay on its sale. Thank you for watching our video, and follow the boring